Hello, Maverick traders. Welcome out to your market roundup for June 7th, 2022. Corey here with you. As always, a quick reminder to make sure you follow your trading plan. So, as we look at, kind of the markets, we've done this for a long time. Rob and Joe and myself, we each have traded for over 20 years. And in seeing the markets, you have to understand that a market environment changes pretty dramatically. And usually, anyone that's kind of new to the market trades the old trade. They say, well, we were in this bear market. So they start to see ghosts and they start to fear that we're going to have the next leg down and we're going to have the next leg down. And that kind of feels like the environment we're in. I talked about that a little bit in that I thought the next trade would be to continue to buy these dips when people freak out. You get a bad news. Today it was Target. Last week it was Microsoft. Microsoft said we're going to have bad earnings because of currency conversions because the US dollar is so strong. The market's kind of sold off, but you could see them buy that up. And so we're in a different market environment here. Now, really we've gone sideways, but you can see that whenever there's these little freakouts on the Microsoft news or today on the Target news, look at how the markets bounce back. And that's telling. That basically suggests that, look, there's some real buying pressure in here. The markets have bottomed. We don't know that it is the mega bottom, but every day that we kind of continue to see buyers of the dip, that becomes more likely. We could certainly get another leg higher and start to work our way up. In fact, the Russell 2000 small cap stocks are now above their 50-day moving average. So they're the first group. Small caps are historically a little bit more high beta, more volatility, more U.S. focused. They don't have as much international business. Something like Apple and Amazon and Google, and those companies might be a little bit more international. The Russell 2000 names are primarily U.S. corporations, but again, they've already started. They've broken above the 50-day. Could they be leading this market and the S&P and the Nasdaq to follow? Certainly could be the case. Look at the news this morning. Target came out and threw the gauntlet down and said, hey, we're going to have bad numbers. We're going to have, profit margins at about 2% versus 6%. It's a really bad environment. We've got too much inventory, and we know Walmart and all these other corporations are in the same boat. And yet, about almost 70% of stocks went up. The overall market is recovering a bit, and we're just seeing more green. So let's take a look at things and kind of make sense of this together. A little bit of a bullish engulfing formation. See how today's bullish candle engulfed or swallowed up the bearish candle, and the expectation would be that this is kind of a high base and will at least try to break out. Now, doesn't have to break out, but it seems likely to do that. If you look at the Nasdaq, it's very similar. You've kind of been in this high basing formation, not quite a bullish engulfing. So the Nasdaq and tech is lagging a bit. I'm going to focus on that a little bit on the bearish side, but I don't want to be a mega bear. I think having a little bit more neutrality, maybe even a little bit more focused on the bullish side, just given the price action. Don't worry about the last trade. The last trade was a bear market environment. I have really felt strongly we were going to rally here the past few weeks, and I think it continues. Use these little freakouts to be that buyer. That's what we talked about last week. I still think it makes sense. Now, one thing I did get completely wrong. I thought energy had kind of an exhaustion top, and they did for the past week until today. Today, energy broke to new highs once again. Big surge, huge volume. I still don't think it's a sector that I want to aggressively buy into. I think actually today is probably as good a sign of kind of exhaustion. It's straight up in the air, huge volume, big bullish candles. It kind of feels like people were sucked in, short sellers stopped out, all of those things, and maybe kind of the last buyers piling in there and feeling like they're missing out. So I'm going to avoid it. I'm not trading it to the upside anymore, but granted, if you had bought the dip last week when it did pull back like we talked about, that would have been a good one. That would have been a very good trade, and I was not involved in that. As we look at other areas, I'm going to focus on some of these mega cap tech on the bearish side. And I think that makes sense for a few different reasons. So, uh, market outlook, we're changing. We're turning a little bit more bullish. We're seeing the dips being bought. I can't get mega bullish, but I'd find myself in this category that I do think we're going to challenge some higher prices in the very short term. Today's price action was pretty impressive. So as we look at ideas on the bullish side, I like the pullbacks in financials, and then on the bearish side, we're going to look at large cap tech specifically. So let's go look at some charts here. Citigroup, bullish engulfing, a little bit of a potential bearish to bullish reversal. Now, think about it. The S&P is below its 50-day. This stock is above it, relative strength. The financial sector is seeing some influx of capital and bonds, which actually impact financials, profitability, what we call the yield curve. When you have a little steeper yield curve, when some of those things happen, that can be good for financials. This should be a relatively good environment in that way. I think Citigroup makes another leg to the upside here. That's a dip worth buying. I think JP Morgan, same thing. I'm looking to buy this dip, and I think we'll make a new high here in the short term. I'm going to look to get overweight the financials basically right here. And then last but not least, Lennar, kind of similar bearish to bullish reversal above its 20, above its 50, relative strength. I think you're going to get this bullish kind of crossing pattern. We've broken above downtrend lines, etc. Kind of a high base, and I expect another leg to the upside here in the short term. So short term, we got some pop potentials. We've had Coinbase. I've had that on the sideways list for the past few weeks, and it's completely sideways. This is just more of an update. I think we pretty much have to remove this as a sideways candidate. It was fantastic. You had the exhaustion low. Normally, when you have this big exhaustion, there will be a sideways consolidation, right? We go from stage 4 exhaustion back to stage 1 consolidation. I think it's time to take profits on the sideways trades. I would expect an uptick here. So that's more of a trading call that I think we've been spot on, that it's sideways, but time to take that and run with it. Take that money off the table. On Amazon, we don't have Bollinger Bands on here, but it actually hit the upper Bollinger Band, and it went through a stock split, a 20 for 1, and I think that sucked in a lot of kind of the public in buying. I like using that as a basis for, I think we should see a downturn. I put on some trades, a couple of those at the end of the day today, just targeting 113, just this 20 period MA here over the next couple of weeks. I'm usually a little bit longer duration trader where I'll trade, a couple of months out sometimes. This one's a little shorter term for me, where I'm expecting a leg down, and my target is 113. If it spikes down to there, should have a nice profitable position. Next stock on the list, Biogen, a large biotech company. I think here you're failing against the 50-day. You kind of had a big bearish engulfing yesterday, trying to bounce back here. But I think in the case of Biogen, another leg to the downside, and you kind of have this inverse cup and handle. I think that sector, that group, has really lagged and underperformed, and I think there's another wave of selling to come. And then Google, I keep mentioning these large cap tech. I think that's an area. Again, it hit the upper Bollinger Band. It's below the 50 period moving average. Notice the shooting star. A little bit of a bounce back today, but I expect another little wave of selling to come in Google. I'm in Amazon already. I'm not in Google, but I would look to add there on the bearish side as well. So it's been my thesis recently. Inflation has kind of peaked. Now we're starting to see some deflationary numbers. What's happening at Target? That's deflationary. Lower prices, lower demand. We're seeing a reversal of some of that inflation, and I suspect it's going to fall here for the foreseeable future. Now, it'll still be higher than the Fed's mandate, but I think they're going to raise by 50 basis points a couple of times, and then all of a sudden we get to the end of the year and inflation's not going to be the big concern it is today. I could be wrong about that, but that's how I see it. DocuSign, NIO, PTR, not much on the earnings front, but DocuSign has had some massive moves. We talked about that today in the video trading earnings and talked about that as a candidate for maybe a volatility crush trade. So watch that video for more info. Thanks everyone for being here. Hope you enjoyed the market roundup, and we will see you next time. Goodbye, everyone.